Hello everyone. If you see the volume and revenue growth for JTL industry, both of them has been growing at above 40% CAGR for the last 6 financial years. And as a result of which, both profit and stock price has jumped exponentially over the last 3 years. And in the last 2 years, the stock has increased from 80 rupees to 280 rupees. But the recent quarterly result was not up to the expectation, but the volume has only shown a growth of 10.8% and revenue has shown a growth of 2.1%, which is quite low as compared to what it has been doing over the last few financial year. And if you see the stock price also, because of the slowed growth, the stock price has only given 11% return in the last 1 year, and in the last 10 months, the stock price has given 0% return, and it is trading in the same range. Additionally, there was a news recently in the month of March 2025 where it was notified that Dubai-based Hawala operator Hari Sankar Tibrewala has invested in the company through FPI route, and this the investor community did not take it in a positive way, and because of which there was a stock price crash in the month of March 2025. But one positive news over here is that JTL Industry is planning to raise approximately 300 crore rupees through qualified institutional placement. And given these high net worth individuals are entering into the company, this is definitely a positive news, and the investor community is also quite hopeful of the turnaround of the company. Given the positive for the company is less as compared to the negative, if you see the stock price, it is still down approximately 25% from the recent high, although it has gained approximately 15% from the recent low, and right now it is trading in a range. Additionally, the management is quite hopeful at this point of time, and they have said that they're quite hopeful of maintaining the market leadership position, and they're working on quite a few initiatives like value added products, and they're also leveraging global opportunities. So in this video, we'll discuss about JTL Industries and we will see what shall we do with the stock. In the video, I will give you the complete understanding of the JTL industry. So I request you to watch the video till the end, because if you miss few of the pointers, you will not be able to take your own decision and you have to rely on others. Please note that the video is only for educational purpose, and please do reach out to your financial advisor before taking any decision. First of all, let us discuss about the industry overview. JTL is the manufacturer of steel pipes, and its products finds its application in various industries, which includes agriculture, water distribution, solar project, energy and engineering, heavy vehicle, and infrastructure. In terms of the opportunity, there is a good potential for the industry. If you see the expected GDP growth for the country, it is expected to grow at 6.7% in the year financial year 2024, and after that, it is going to grow at approximately 7%. But if you see the growth rate of steel industry, it is expected to grow at 10% in the year financial year 2024, and from financial year 25 to 30, it is expected to grow at a rate of 8.5% CAGR. So given the industry growth rate is more than GDP growth rate, this industry is quite lucrative. And because of the government's initiative with respect to industries like construction, water supply, airport, etc., I'm quite hopeful that the company will do good in the coming quarters. So, in terms of few of the initiatives in Jal Jeevan Mission, there is a plan to provide clean drinking water to approximately 180 million rural households by 2024. In terms of affordable housing, there is a plan to give household to approximately 4.5 million household. In terms of railway, there is a plan to modernize 1275 railway. For metro, they're planning to increase the metro network from current 890 kilometer to 2880 kilometer. All these things looks quite promising, and the industry is definitely having good tailwind. There are quite a few risks for the industry as well, and one of the risks is slow growth in the economy. If there is slow growth in the economy, then obviously there will be slow growth for the infra project, which will impact the entire industry. Next, let us do the fundamental analysis of the company. In terms of the total capacity for the company, the total capacity for JTL industry is 5,86,000 metric ton per annum, out of which approximately half of the capacity is backward integrated, which is definitely a positive sign, and because of which they're able to command higher margin. They have pan India presence and they have five manufacturing facilities. Out of the five manufacturing facilities, two of them are in Punjab, two in Maharashtra, and one is in Chhattisgarh. Because of the strategic location, they are able to get the raw material at cheaper price, and because of which they are able to expand their global and domestic footprint. This slide gives the global presence for the company, and they have the presence in five continents and 20 nations. They have their presence in North America, UK and Europe, Africa, Asia, and Australia. In terms of the product portfolio, they have the product portfolio across different industry, and if you see, all of these industry are quite promising at this point of time, and there is a good amount of focus by government of India as well for this industry. In green energy also, they have their products where they are working on solar module mounting structures. For Jal Jeevan Mission, they are one of the key supplier for Jammu and Kashmir government. In terms of their key customer, they have the key customers across different industry. In power, they have Tata Power, NTPC, Power Grid, etc. In terms of utilities, they have Mahanagar Gas and IGL. And in terms of heavy vehicle, they have Ashok Leyland. Apart from this, they also have different government-owned bodies, which is not listed in this particular slide. They have a good mix of experience and young blood in terms of leadership. So if you see folks like Madan Mohan Singla, Rakesh Garg, and Amrinder Kaur, all of them are having more than 20, 30 years of experience. And few of the young bloods includes Dhruv Singla and Preet Kamal. And apart from this, most of the leadership team are in the company for quite some time, which is definitely a positive news. In terms of moat or strength for the company is focusing on the backward integration, and two of its plant, one in Chhattisgarh and other in Mandi, is having backward integrated, which is definitely a positive news. And because of this backward integration, they do not have to rely on other supplier, and as a result of which, their EBITDA per ton is industry leading. They have their presence in both primary and secondary steel market. One thing to note over here is, given they are in the manufacturing industry, they should be having higher debt. But this company is having zero debt at this point of time. And apart from that, they're also having approximately 130 acre of land, which can be used for the manufacturing of any new plant as well. There are quite a few risks and threats for the company. One of the risks obviously is volatility in the steel prices, because of which there might be a destocking at the dealer's end, which will have an impact on the EBITDA. Apart from that, if there is any slower growth in the economy, which I have already explained in the risks for the industry, there might be a delay in the construction and infrastructure projects, which will lead to a decrease in volume and will also impact the sales volume. One thing to note over here is the structural tube industry is highly competitive. In terms of competitor analysis, these are the major player in the industry. Out of them, JTL, Surya, and APL Apollo are the top three players, of which APL Apollo is having the highest revenue. In terms of way forward for the company, few of the things I have already explained in the previous slide. One thing that I would like to explain over here is the company is expecting to grow at a rate of 30 to 35% in this financial year, which is definitely a positive news. And apart from that, they're focusing more on the value added products. So they're planning to improve the contribution of value added products to 14% of all the revenue that they are generating right now, and because of which their EBITDA will improve. One thing additional that I would like to update over here is they're planning to improve the total capacity to 1 million metric ton per annum, and right now their total capacity is approximately 5.8 million ton. So in the coming 1.5 year, they're planning to improve the total capacity to approximately 100%. One thing to note over here, in the last quarter, the revenue from the government segment was quite low because of the election, and the company is quite hopeful that in the coming quarter they will be getting quite a good amount of project from the government sector. Next, let us discuss about the financial and valuations. In terms of stock P, the stock P is at 30.8, which is slightly higher than industry P. Apart from that, if you see the ROCE and ROE, both are quite good. One of the most important thing to look over here is placed percentage and debt to equity ratio. Given they are in the manufacturing industry, anyone will expect that they should have high debt or few of the promoter stocks will be placed. But both of them are approximately zero, which is definitely positive. In the last quarter, the company had shown only 2% growth in the revenue. But one good thing that has happened in the last quarter is their EBITDA per ton. The EBITDA per ton has shown quite a good improvement, as a result of which, if you see, both EBITDA margin and PAT margin has shown good improvement year on year. In terms of QOQ and YOY result, as explained earlier, the revenue from operations only grew by 2.8%, and both EBITDA and PAT margin has improved quite a bit. The balance sheet also looks quite healthy, where they are sitting on highest ever reserves, and also fixed asset is highest ever, and the borrowing is lowest ever. In terms of cash flow for the company, the cash from investing activity is in negative, and the reason behind that is they are doing a good amount of investment across different plants, whether it be Mangaon, Raipur, or Mandi. The cash conversion cycle for the company has also shown good improvement. If you see the cash conversion cycle in March 2021, it was 98, and right now it is at 60. Apart from that, the working capital days has also improved over the year, and it is at 91 right now. In terms of shareholding pattern, although there is a decrease in the promoter holding from 56% to 50%, all the sale by the promoter has been absorbed by the FII and DII. So if you see the FII holding has increased from 0% to 10%, and DII holding has increased from 0% to approximately 2%. And the public holding has decreased from 43% to 37%. One thing to note over here is in public holding, approximately 6 to 7% of public holding is with the high net worth individual, which is again a positive sign. Next, let us do the peer comparison for the company. In terms of PAT margin, JTL Industry is leading. In terms of valuation, Surya Rosni is having the cheapest valuation. For both ROCE and ROE, APL Apollo Limited is having the highest ROCE and ROE, followed by JTL Industry. So if I have to pick two companies from here, I will pick JTL Industry and Hariom Pipe. And out of them, JTL Industry will be my preferred pick. And if you have to go with low risk, you can go with APL Apollo Tube. Next, we will discuss few of the important pointers from the con call. So one thing that management has said in the con call is they have completed the takeover of Nava Steel Metals company, and with the help of which they're able to achieve 10,000 tons of sales, and this has also helped them in the backward integration. One more thing to note over here is in terms of the total revenue, the company was getting total revenue of approximately 50 to 55% from dealer network, and 15 to 20% from government, and 20% from OEM and EPC player, and the remaining was coming from the exports. But in the last quarter, the revenue from the government sector was less than 15%, which is why the revenue for the company was lower in the last quarter. And the company is hopeful that the percentage of revenue from the government sector will improve in the coming quarter. Next, we will do the technical analysis for the company. So first of all, let us discuss about the weekly and daily chart pattern. So if you see the chart of the JTL industry, the stock has been in uptrend for the last approximately 2 years, where it has jumped from approximately 80 rupees to 280 rupees. And over the last 6 or 7 months, the stock has been in downtrend and it has been consolidating. And it is still down approximately 25% from the recent high. Apart from that, the RSI of the company is also showing a weaker trend. So I'm not expecting any high jump in the stock price in the coming days. It might take some time for the stock price to show some momentum. Next, let us discuss few of the financial ratio. So if you see the P ratio of the company, the stock is trading slightly higher as compared to the 3-year median P, and 5 and 10-year median P is not valid for the company because the stock had its listing recently. Next, we will discuss about the analyst rating and my take for the company. Axis Direct has been covering the company for quite some time, and they are still bullish on the company, and they have maintained their target price of 260 rupees. Hem Securities have recently started covering the company, and they are giving a target price of approximately 288 rupees for the company. In terms of my take for the company, the first support is at 204 rupees, the next is at 175 rupees, and the last support is at 140 rupees. In terms of resistance, the first resistance is at 250 rupees, and the next one is at 280 rupees. And if the company is able to meet the management guidelines, then there is no resistance and you can keep it for the long term. And if you have the stock from the lower level, you can stay hold. And apart from that, you can also average the stock if it comes to these prices. Thanks for watching the video. If you have any comment, you can ask in the comment section. Apart from that, if you have found the video to be helpful, you can like, share, or subscribe. Thanks for watching. Thank you.